generation. Firms produce goods and services with the help of factor services. Production of goods and services by firm cause generation of income. Okay, and then income distribution is there. Once you do the income, like once you get the income, like whatever whoever was involved in generation of income, you will just give it to them. So factor income like wages, rent flow from firms to household according to the contribution to the production. If I have a manager in my company, I'll give 1 lakh rupees to him. If I have the serviceman, I'll give 50,000 to them. Like this, I will distribute the income, and then they all will be doing the expenditure. So the income received by the factor of production is spent on the goods and services produced by the firm. In this way, income generated in production unit reach back to the production unit and make the circular flow complete. So what we got to know from all this, we got to know whatever value you will produce, whatever value will be there of your output, that will be your income. Right? For example, I produced 10 chocolate and one chocolate was for 10 rupees. So I produced 100 rupees. Right? Then I will be basically this 100 rupees I will distribute among all the people who were engaged in the working process. And those people also want chocolate, so they will be spending it again to the firm. So over here, value of output produced will be equals to value of income you will distribute, and that will be whatever money they got. They will be doing the expenditure. So it is basically we are getting to it like that there are. So over here, to calculate national income, we have three methods which we'll be dealing in this chapter. Okay. So you will first write this phases of circular flow in national income. You will draw this, and then you will write the detail. Clear?
Yes, ma'am.
lambda.
I am also done, ma'am.
Girls done.
No, the last
I'm the
one.
last.
Okay, do it.
Done, ma'am.
I'm done.
Okay. Now after this, we are going to the next page, which is basically over here. We are going to discuss this national income and the related aggregate and some basic concepts. Okay. So let's just start. Over here, the classification of goods and all that we have already done in the previous thing. So we are not going to do that again. But there is one very important thing which we are going to do over here is, wait a minute. Yeah. First of all, what are the meaning and the types of investment, right? So over here, first of all, what is investment? So investment you already know, but there are two types of investment. One is the gross fixed investment, or which is known as gross fixed capital formation, and the other one is change in stock or the inventory investment. So what you will write? You will write types of investment. Okay, investment you already know the addition. We already did the definition, right? So types of investment, and you will draw this chart: gross fixed investment or the gross fixed capital formation and the change in stock. Clear? So right now, these are the terms that you have to remember when we will be doing the formula. Over there, instead of investment, I will write this: gross fixed capital formation. So at that time, you should clearly think that what is this? This is basically a part of investment. Clear?
Yes, ma'am.
Yes, ma'am.
Done, ma'am.
I'm done.
Okay. Now let's just move to the next part. Okay. So first of all, the thing is that in this, these are the two types. One is gross fixed investment and then is change in stock. So over here, the question is, ma'am, what will come under gross fixed investment and what is going to come under this inventory investment? Okay. So over here in the gross fixed investment, you are going to include this gross business fixed investment, gross residential construction investment, and the gross public investment. Right now, you will be feeling so much confused like, ma'am, what are these terms? How will we remember that? But one by one, when you will learn them, you will again and again, these words will come. You will able to recall that. Okay. So over here, under gross fixed investment, these are the three terms that can be used. Gross fixed investment. So if I am asking you to calculate gross fixed investment, and these three entries are given to you, so that means you have to add all of them. Clear? If gross fixed investment is given, then you will take gross fixed investment. But instead of gross fixed investment, over here, if these are the things that are given, you will add all these three. First is gross business fixed investment. It includes basically fixed investment like the machinery, equipment, factory. Gross residential one, like residential means where you will be doing the construction work, right? The flats and the residential house. And public investment like the hospitals, schools, which the public is going to use. Clear? And then what is the formula to calculate gross fixed investment? Stock of fixed asset at the end of the year and stock of fixed asset in the beginning of the year. Clear? Then inventory investment over here, it is a change in stock of finished goods, semi-finished good law this. So over here, inventory investment is closing stock of finished, semi-finished and raw material minus opening stock of finished, semi-finished and raw material. Clear? Yes? No?
Yes, ma'am.
Okay. So I hope you are
Yes,
getting
ma'am.
it. It was basically this gross one. So this is basically the thing. The what is gross and what is the inventory part. Clear? So quickly write it down.
Yes, ma'am.
Okay.
Done, ma'am.
Done, ma'am. Mhm.
Both of you done?
No, ma'am.
Okay, okay, do it.
Done, ma'am.
Okay. Now over here, net investment we'll do later on. Okay. Mm, fixed investment inventory. Okay, we have done this. Okay, now coming to very, very important part, which is the depreciation. Sometimes they give you the question directly for 3 marks from depreciation only, the theory part, right? So let's just do this. So first of all, depreciation, which is also known as consumption of fixed capital. Clear? So what is depreciation? It's like it's I hope you all has heard the word deprived, right? Deprived is basically lack of, right? So over here, for example, if I bought a new, you can say car, right? Though I will be using it. For example, I just bought this car for 1 lakh rupees. Okay. After 2 or 5 years, will be the value of this car will be 1 lakh rupees or it will change if I'll sell it.
It will, it
It
will
will be,
change.
it will change and it will be not change and it will not become 2 lakh. It will always be less than 1 lakh, right? It can be 50,000, 60,000 like that, right? So this is basically depreciation is defined as loss or fall in the value of fixed asset due to normal wear and tear and expected obsolescence. So over here, what happens basically when you use some product, right? Like for example, I bought a new dress and I'm just wearing it. So basically, it's normal wear and tear. I'll use it, and the cloth material. So basically, the fixed asset, not the clothes. Basically, fixed asset like my washing machine, like my mobile phone, my a car, my scooty, whatever it can be. So this is basically depreciation. What is depreciation? When there is a loss in or fall in value of any particular fixed asset, that is known as depreciation. Now, ma'am, what are the causes of depreciation? So first is normal wear and tear. So it is during production process, the productive capacity of the fixed asset like machine, tool, truck, engine goes on decline because of its continuous use, leading to its fall in value. Right. So over here, we are daily using our car. So of course, there will be degradation in our engine. For example, I have a printing machine. I am regularly printing books from there. So there will be the issue, right? So this is basically normal wear and tear. Wear and tear means you are using it. That's why it is degrading. And then second one is expected obsolescence. So over here, it means loss of asset due to there are, for example, continuous change in technology. For example, let's just take an example of iPhones. Okay, so iPhones every year releases new phones, right? So for example, I bought iPhone 10 few years back, right? So right now I just bought it for 1 lakh rupees. For example, currently the latest technology is iPhone 14, right? So over here, the value of my product will not be same. Why? Why it is not same? Though if it is brand new as well, it will be not same. Why? Because now in the market there is new technology. So why people will invest their 1 lakh rupees in the old version? They will go for the new version. So over here, there is a loss, though you have a packed new phone, right? So you have ever seen that when new iPhones are released, the price of old iPhones it get reduced, right? So it is basically it's not like that I'm using it. It's basically new technology has been introduced and now everyone will go to it. Not nobody will purchase the old version, right? So that's why it is basically the expected obsolescence. Second, now change in demand. For example, in summer, you are getting a nice maybe you dress a nice dress in 1000 rupees, right? The same dress in winters will of no use, right? So this is second one. And then government policy change that from tomorrow this product will not be valid. Clear? Sorry.
Yes, ma'am.
We will first write depreciation
Yes,
till
ma'am.
here and then the causes. Okay.
Okay,
Yes,
ma'am.
ma'am.
Okay. So just write the definition. So sometimes they give you the question like what is depreciation, what are the causes of depreciation. So you should know that. And after this, there are few names of depreciation. This is what. So instead of depreciation, I can write consumption of fixed capital. I can write replacement cost of fixed capital. I can write current replacement cost and the capital consumption. So these are the words that these are the other name of depreciation. Clear? So students know only these two. And when in exam hall, they give you current replacement cost and they are like, what is this? It is nothing. It is only depreciation. Clear?
Yes, ma'am.
Okay.
Yes, ma'am.
Ma'am, can you scroll down?
Ma'am, I'm back.
Ma'am, can you scroll down? Done, ma'am.
You can write this. Depreciation is also known as.
Yes, ma'am.
Ma'am, done.
Done, ma'am.
Okay, both of you done? Okay, now
Yes,
one
ma'am.
more thing you have to remember the formula basically. If they have written anything over here. Okay, there is a formula for depreciation. Okay, where you are going to divide it, whatever you got for the, okay, that will be discussing with the formulas only. Okay, there can be some unexpected obsolescence as well. For example, I have a school, okay, and some natural calamity comes like the flood, earthquake, or something like that. So that also basically got, like, it got dismantled. Clear? I hope you will remember that, right?
Yes, ma'am.
Okay. Now, what
Yes.
happens basically? Depreciation and the capital loss. There is a difference, right? But most of the students they get confused that depreciation. They think loss means capital loss and the depreciation they are the same thing, but no, there is a difference. So, depreciation and capital loss. What is the difference? So, it is a loss in value of a fixed asset due to normal wear and tear and expected obsolescence. Right? It is a loss in the value of fixed asset due to natural calamity and unforeseen obsolescence. So over here, your capital is losing. For example, you have a school. When there will be earthquake, you will lose that school. It will not that if you will sell that school to somebody. Depreciation is the value is degrading. But when you lose the entire capital, that is basically the capital loss. Clear the difference between depreciation and capital loss?
Yes, ma'am.
Okay, it is expected loss. Everybody knows when you will purchase, you will use it. This is expected, but it is very, very unexpected, right? Over here, provision of depreciation is by maintaining depreciation reserve fund. So over is a depreciation reserve fund. Over here, you can use that. And over here, there is an insurance. So depreciation reserve fund is like if you keep on servicing your car. right? So that is basically you keep it updated. For example, mobile phone also you are updating all the software, so that is depreciation reserve fund. But for this cars and the school and all that, there is an insurance in case if there is a natural calamity or something, so you will get back all the money. Like this, there is an insurance. Clear? So you
Yes,
can
ma'am.
quickly write it down. You don't have much time, but quickly write it down. Difference between depreciation and capital loss. No need to write this. Just write the difference.
Done, ma'am.
Ma'am, you want to answer?